In the year 2000, a company spun off part of its own business onto the stock market. And within days, that spin-off, a company it still owned 80% of, became worth more than the parent company itself. Investors were in effect valuing the piece as worth more than the whole. It's one of the strangest moments in tech stock history. The parent company was 3Com, founded by the actual inventor of Ethernet, the technology that quietly runs almost every wired network on Earth to this day. Within a decade, 3Com wouldn't exist as an independent company at all. This is the story of 3Com, the company that helped build the modern network and then got absorbed into the very infrastructure it created. The story starts with Bob Metcalfe. In the 1970s, working at Xerox's legendary Park Research Lab, Metcalfe co-invented Ethernet, the technology that lets computers on a local network talk to each other. Ethernet wasn't an obvious commercial hit at first. Xerox itself, despite inventing it, never turned it into the business it could have been, a pattern you may recognize if you've seen our Xerox video. Metcalfe saw the opportunities Xerox didn't chase. In June 1979, he founded his own company to commercialize it, naming it 3Com, short for Computers, Communication, and Compatibility. He recruited Bill Krause, an executive from Hewlett-Packard, to serve as president, while Metcalfe took the CEO role. The company shipped its first product, an Ethernet adapter card, in 1981.
This is a close perfect timing. The IBM PC had just launched, and the corporate world was about to spend the next decade wiring millions of individual desktop computers into networks. 3Com's network interface cards, the physical hardware that let a PC plug into Ethernet, became a foundational product for that entire build-out. The company went public in March 1984, raising $10 million. Through the mid to late 1980s, 3Com expanded aggressively, acquiring companies like Bridge Communications to build out networking hardware, hubs, switches, routers, beyond just the adapter card that built its name. By the mid-1990s, the internet boom was accelerating, and 3Com made its boldest move yet. In 1997, 3Com acquired US Robotics, the leading maker of dial-up modems, the devices millions of households use to actually connect to the internet, for $8.5 billion. The deal also brought 3Com something unexpected. US Robotics owned Palm, the company behind the Palm Pilot, the breakout hit handheld computer of the era. By 1999, 3Com was posting over $400 million in net income on nearly $6 billion in sales. On paper, this looked like a company at the absolute height of its power. Ethernet's inventor, now also holding one of the hottest consumer tech products in the world almost by accident. Then came the moment that made 3Com genuinely famous on Wall Street, for reasons that had nothing to do with networking. In March 2000, 3Com spun off a small slice of Palm in an IPO, planning to distribute the rest of its Palm shares to 3Com shareholders later that year. After the IPO, 3Com still owned around 80% of Palm. But when Palm started trading, investor enthusiasm for the standalone handheld computer story pushed its stock price so high that Palm's total market value, on paper, exceeded 3Com's entire market value, including the 80% of Palm that 3Com itself still owned. Mathematically, that meant the market was valuing the rest of 3Com's entire networking business, the routers, the switches, the adapter cards, the whole company Bob Metcalfe built, at less than zero. It became one of the most cited examples of dot-com-era irrationality in financial history. The market wasn't pricing the company, it was pricing a story.
The Palm spin-off fully completed in mid-2000, and US Robotics was also spun back out as its own company again around the same time. What remained of 3Com was smaller and increasingly exposed. Its core cash business, network interface cards, was already starting to erode, for a structural reason with no real fix. Computer manufacturers had begun building networking capability directly onto motherboards. The very function 3Com had once sold as a separate physical card was quietly becoming a built-in commodity feature, worth almost nothing to sell separately. Eric Ben-Amu, CEO through the company's peak years, stepped down in 2001. His successor faced a shrinking core business, a dot-com crash gutting enterprise tech spending across the board, and a company that no longer had a clear answer to why does the customer need 3Com specifically. Through the 2000s, 3Com fought to stay relevant, competing directly against Cisco, the company that had by this point decisively won the enterprise networking market. 3Com pushed into new areas, including a major joint venture in China to compete on price against Cisco in emerging markets. It wasn't enough to reverse the fundamental trend. The company that had once defined how computers physically connected to each other was now a shrinking player in a market it had helped invent. In November 2009, Hewlett-Packard announced it would acquire 3Com for $2.7 billion. The deal closed in April 2010. The company Bob Metcalfe built to commercialize his own invention, after 31 years as an independent company, ceased to exist, folded into HP's networking division. So what actually happened to 3Com? Unlike some of the companies we've covered, this isn't really a story about a single bad decision. 3Com's founder invented the underlying technology, built a real and dominant business on it for 2 decades, and made a genuinely massive acquisition that, for a few years, looked like a masterstroke. What ultimately erased 3Com was quieter and harder to fight. The exact product that built the company, the physical network card, got absorbed into the hardware it used to plug into. Ethernet won completely. 3Com, the company built specifically to sell you the piece that made Ethernet work, became unnecessary in the process. And along the way, for one strange moment in the year 2000, the stock market decided that the piece of the company it didn't fully own was worth more than the parts it did. A signal, in hindsight, that nobody quite knew what 3Com was actually worth anymore. Bob Metcalfe once joked, years later, that the internet was heading for a catastrophic collapse. He was wrong about that. But watching his own company get quietly absorbed into the infrastructure it helped create, that turned out to be the more accurate prediction about 3Com itself. Sometimes a company doesn't fail because the technology loses. It fails because the technology wins so completely, it doesn't need the company selling it anymore. If you found this one interesting, next time we're covering another company that built something the world couldn't live without and still couldn't survive it. Subscribe so you don't miss it.